Good morning, ladies and gentlemen, and welcome to Cepsa 2030 strategy presentation. I'm Carmen de Pablo, Cepsa CFO, and I'm joined by Martin Wetzeler, our CEO. Both Martin and myself are very pleased to have you all join us today for this event. This is an important day for Cepsa. It is an important day for us, employees and management team, as we unveil the strategy we will be leading over the next decade, and as we drive Cepsa into the energy transition journey, into positive motion. But before we start, let me briefly refer you to the disclaimer in slide 2 of the presentation, which sets out the legal framework under which this presentation must be considered. Now, it is time we share with you our positive motion strategy. Martin, thanks for joining us. The floor is yours.
Thank you very much, Carmen, and good day to everybody who's joined. A warm welcome to Cepsa Positive Motion. It's great to see you. It is indeed a historical moment for Cepsa. We were there 100 years ago during the previous energy transition. We invested our money and our skills in getting society to go from horse to car. And today we are stepping up to become an important part of the change from a fossil fuel-based system to a sustainable energy system. And that's a massive shift that everybody, whether you're a consumer of energy or a producer of energy or both like us, will need to adapt to. Today we want to explain how Cepsa is going to respond to this challenge. We call it our positive motion strategy. Now, why positive motion? It sets the tone for all we do going forward. It's not just about carbon, although it certainly is. But it's about a philosophy that embraces positivity, positive experiences for our customers as they come to our sites or as we deliver our goods to them. Positive solutions for our customers looking to decarbonize their energy footprint. But also positive impact on the world around us. Not just on carbon, but on all the broader aspects of environment, on employment, on energy security, on energy independence and affordability, on diversity, equal opportunity, on everything that matters for us as a society, as citizens. Cepsa wants to have a net positive impact. And it is not just on ourselves, it is also on our customers, helping them move from their current carbon footprint to a zero carbon footprint in a convenient, cheap and easy way. Cepsa is extremely well placed to deliver the transition that way, and I will explain a bit more about that later. Let me first give a bit of context, because the world is changing rapidly. Climate change has been a topic for decades, since the Rio Climate Conference in the early 90s. But lately, society has actually started to do something about it. We see customers and citizens being willing to change their behaviors, being willing to open their wallet to buy an electric vehicle or a solar panel, and to actually care deeply about climate change. We see governments shifting from talking about it and making promises to actually implementing ambitious policy, such as EU for 55. We see the financial industry embracing ESG and carbon as a central thesis for its investment and its lending strategies. And recent events here in Europe, in Ukraine, have reminded all of us just how important energy security and energy dependence are, or independence rather. Now there's another big change going on, which is the digital revolution. Digital has changed a lot. It is improving the speed of innovation and bringing down the cost of innovation rapidly. Whole supply chains are being reinvented with the help of digital. Whole industries are being reconfigured as a result of digital. And in this changing landscape, positive motion is our strategy for the next decade to, within this changing world, succeed. Succeed first and foremost in bringing our business to net zero into net positive. Net zero is on the top of the energy industry agenda. It certainly was on top when I joined Cepsa earlier this year in January, and actually in my previous life when I was with Shell. I am convinced that as a company and as an industry, we cannot just achieve net zero, we can go beyond it. Now let's talk about a few of the climate scenarios in front of us. The IEA makes 4. The most conservative one is called stated policies, where governments essentially enforce what is in place today. That will certainly get us into climate trouble. The second one is where governments actually comply with their announced pledges and deliver on them, which is a better scenario, but still not Paris compliant. In order to be Paris compliant, we need to live in the sustainable development scenario, where governments, businesses, citizens, countries increase their commitment to climate change, make new pledges to avoid climate change and to go down the energy transition. And then we can stay below 2 degrees temperature increase. And the most ambitious one the IEA can come up with is the net zero emissions by 2050 strategy scenario, which delivers 1.5 degrees temperature rise. But we in Cepsa want to invest in the most ambitious scenario that exists, which we call a world in positive motion. This goes beyond net zero and becomes a net positive impact on the environment, a net positive impact on climate before 2050. That is what we put our weight and our money behind today. And within that challenging scenario, we have decided to address the toughest challenge of them all. If you look at the different energy consuming sectors in the world, some of them are easier to decarbonize and some more difficult. And what the easier to decarbonize sectors have in common, and they're on the right side of this graph, is that they use electricity. Decarbonizing electricity is relatively well understood. You use solar, wind, battery storage, grid investments, and off you go. I'm not saying it's trivial. It will take a lot of money and work, but the solutions are there. On the left-hand side of this graph, you see industry and transport. Much more difficult to decarbonize. Not so much the cars that you and I drive, but the buses, the heavy trucks, the boats, the ships that go to the other side of the ocean, the airplanes, and of course in industry making steel, cement, chemicals, fertilizers. Lots of very energy-intense industries in this world that need a fuel, a molecule, in order to go around. They cannot be electrified. And if they can't be electrified, they need a green fuel, and that is much more tricky than a green electron. And we in Cepsa will focus on the creation and the growth of the green molecules, the green fuels business. Because the good news is, we already produce it today. And the positive motion strategy sets out how we're going to produce much more in the future. Now, yes, that's a challenge, but it's also an opportunity. FTSE Russell put it at $4 billion of market cap opportunity, value creation opportunity for businesses that are able to respond to the fast growing demand for climate solutions, for net zero solutions. And we at Cepsa would quite like to have a part of that 4 trillion. But it's not the only thing that gets us going. Actually, we want to be part of the solution. We want to be a force for good. We want to help change the world in energy transition, be in positive motion, and have a net positive impact on the world around us. And we are very well placed for 2 key reasons. Cepsa has the right size. Cepsa is not too small, and it's not too big. It's small enough to be fast, to be nimble, to experiment a bit, to pivot, to actually be able to transform within this decade. But it's also large enough to have deep technological expertise, deep execution expertise, to have a sophisticated approach to ESG, and to be relevant for global partners, to have a global presence, and to work with governments and opinion makers in order to make the future. So we are the right size. But Cepsa is not only the right size, we're also in the right place. Because the energy transition is happening in Europe faster than anywhere else. And within Europe, it's happening in Spain. Spain is a front runner in Europe for many good reasons, including policy, but also because it's blessed with plenty of sunshine and wind, particularly in the south of Spain, which is where our energy parks are, in Andalusia, where you get the cheapest clean electrons of Europe. a fundamental building block of the energy transition and energy carriers. So we are the right size, we're in the right place, and we're ready to go. So let me then talk a little bit about the company itself. We have 3 successful businesses, a great starting point. We have an energy business that starts with energy parks. Before this, they were called refineries, where we transform the oil into products. We distribute, we market, we sell lots of other products, convenience products, etc. That energy business is a very strong business, focused on Spain and Portugal, although there's a bit of an international presence beyond that as well. That's the business we will transform this decade. That is going to go from here to being a very, very different business by the end of this decade. And we will spend most of today's presentation on that business, because that's where the radical change is. EMP and chemicals also have a strong starting point, but they have strong strategies in place that we will refer to today, but we're not changing them, so that will be a shorter section. And EMP and chemicals are becoming more autonomous within the Cepsa group in order to be focused on their own business, but more about that later. Now, our strategy is called Positive Motion. We want to go beyond net zero to be net positive. Net zero feels a little bit about something like doing less bad, promising to be less bad. We're promising to be more good, to do more good. And to not just do more good at Cepsa, but to enable our customers to go green, offering them cheap, affordable and convenient solutions to go green. Delivering total solutions to them to help decarbonize their energy usage. Not just products, but solutions that over time can get them to where they want to be when it comes to decarbonization. If we become a leader in sustainable mobility and a leader in sustainable energy, and we can bring our customers with us, then jointly we can create a brighter future for all. And that's what Positive Motion is about. Carmen, do you want to say something about our carbon commitments?
Absolutely. Thanks, Martin. So as already mentioned during our results presentation, we have a strong commitment and focus on carbon emissions reduction and ESG overall. They are both at the core of our Positive Motion strategy. As Martin has mentioned, we want to become a recognized leader in the transition to green economy. And so for that, we have set out ourselves some challenging carbon commitments to address climate change. A 55% reduction in Scope 1 and 2 emissions by 2030 when compared to 2019. A 15 to 20% reduction in the carbon intensity of sold products by 2030 versus 19 as well. And an overall target to become climate neutral across all 3 scopes before 2050. This is a strong commitment to ESG, which is required to reach these targets. And how can we achieve this? By setting sustainability at the core of our business and governing bodies, prioritizing those sustainable development goals where Cepsa can have the biggest positive impact on society, and of course, linking our remuneration to ESG metrics, as we already do. But we also incorporate ESG criteria in every investment decision we make. And we foster alliances and partnerships that will leverage in advanced technologies and innovation to help our own business and customers shift to more sustainable solutions. We drive the ESG culture alignment through the complete value chain. And we use also third-party assessments to keep challenging ourselves. And so far, we have been recognized amongst the leaders in our category as we ranked first by Sustainalytics and in the first quartile in the S&P CSA in the energy sector. And we're also part of the leadership category, both in CDP Climate and CDP Water, as well as a top-notch ranked by Financial Times, Top Employer, and EFR, as we offer attractive and sustainable value proposition for our employees, who are really the key deployment of the strategy. And now, Martin, I hand over to you in order to go into more detail on how we will transform our business in the future into Positive Motion.
Thank you, Carmen. Let me start with the energy business, the business that is going to undergo this enormous transformation in the coming 10 years. We're creating what we call a positive motion ecosystem, where on the one hand, we have our mobility and new commercial business, that is new commerce business that is focused mostly on B2C customers. And then we have our sustainable energy, the sustainable energy side of it, which is led by our commercial and clean energies business, that is mostly focused on the B2B customers. And together, they create decarbonization solutions and sustainable mobility solutions for anybody that buys energy. But it's not only about selling energy, we need to make that energy as well, and that's where our energy parks come in. Our energy parks will progressively change the mix of products they produce, of course continuing to make the traditional fuels as long as Spanish citizens and business needs them, but increasingly complementing them with the green alternatives like hydrogen, biofuels and green power. And more than ever before, we will need to travel together with partners down this journey. We can't do this by ourselves. We will need industrial, commercial and civil society partnerships in order to get into positive motion and get to the targets, the ambitious targets that we're setting for ourselves today. That's the ecosystem that we are starting to create today. Now let me first talk a bit about sustainable mobility and new commerce. On the mobility end, we will build an industry-leading ultra-fast charging network in Spain and Portugal. Building, once we get going, 20 ultra-fast charging points every week, as long as necessary in order to eventually have a network that connects all of the Iberian Peninsula and gives our customers a Cepsa charge point every 200 kilometers on the main intercity corridors. And this will be a significant contribution to the e-mobility ecosystem that we are creating together with Endesa, to give our joint customer base the biggest e-mobility offering in Spain and Portugal, unrivaled by anybody else. Now that will help electric vehicles, but we also very much believe in the decarbonization of heavy road transport. And for this we believe hydrogen will be the solution. And we are going to construct up to 100 hydrogen fueling stations in Spain and Portugal in the rest of this decade to make sure that our trucking customers and busing customers can refuel hydrogen every 300 kilometers on the major commercial road transport corridors and make sure that they never have range anxiety, just like our EV customers don't. And finally, in this business, we will develop a mobility as a service or a vehicle as a service value proposition, where we make it easier for people to rent from us cars that are electric vehicles that are charged on a per kilometer basis, or even hydrogen trucks that are charged on a per kilometer basis with all the energy included in it, making it very, very convenient for our customers to change their behaviors and to adopt a carbon-free mobility solution. Now, this will all take place in our strong network of 1,800 stations around the peninsula. These 1,800 stations we will transform into digitally enabled, ultra-convenient food destinations and energy destinations. It's a bit like moving from where today you kind of have to stop at our station because you have to refuel, to a world where you want to stop at our stations because they are convenience hubs. They offer you not just the energy that you need, the electricity, the hydrogen, the fuels, the LPG, the biogas, the car wash, but also the grocery that you might need on that day, the fresh food that you might be after, the pharmacy shopping. You might well have your internet purchases delivered at a Cepsa station near you or near your home and pick it up from us on your way back home. We will operate kitchens and we will have grocery stores from which our partners who do last mile delivery can deliver food and groceries to your home. These will be convenience hubs which are multi-purpose and will become a part of your life as you're a Cepsa customer and as you start to discover the convenience of the very broad offering that will come from these sites. This will have the power to increase the non-energy income that we have by a factor 5 this decade. But not only is the physical change, that change will also have a digital layer. We will create a digital environment where we can offer you a totally personalized experience. As you become a loyalty partner of Cepsa, you will be able to get in that app offerings that are relevant for you at that moment in time. We will remind you of the package that you forgot to pick up yesterday, or when we know you're driving past our Cepsa site, normally around 6 in the evening, we'll make sure that a relevant offer is sent to you well before you start driving, so you can decide whether you want it or not. This personalized experience, we will invest close to $100 million in building a state-of-the-art digital layer, not just an app, but a total digital infrastructure in order to be able to communicate seamlessly and in a modern way in real time with all our customers on an individualized basis. That will game change the experience that our customers will have on our sites that in themselves will be game changed as well. So a very, very different retail experience as you come to Cepsa in future. Now I talked about the other side of this ecosystem, which is about sustainable energy. We have long-standing, multi-year, multi-decadal relationships with very, very important customers, whether they are in the industry, in aviation, in shipping, in fertilizers, in many segments of society here. We have long-standing customer relationships. And all those businesses are having boardroom discussions about how they get to net zero, how can they decarbonize their energy usage. And we aim to be the partner of choice for them, offering integrated net zero solutions for them to adopt over time. They cannot move in one go. Over time, they will change their energy consumption, and we will be the ones offering them integrated packages. Packages that today consist of fossil fuels, but increasingly start to consist of hydrogen and biofuels and clean power. Let me first talk about hydrogen. Because we're in Spain. We're in the south of Spain with our energy parks. And Spain is extremely well placed when it comes to hydrogen. It has the best solar and wind conditions that you can imagine in Europe. And as a result, it produces the cheapest green electrons right there in the south of Spain in Andalusia, where our two energy parks are located. And if you realize that the cost of green hydrogen is dominated by 75% by the cost of electricity, you will realize what the potential is of the south of Spain to become a major green hydrogen hub, not just for Spain and Portugal, but actually for Europe, contributing to energy independence, energy security, and of course to industrialization of the south of Spain. And not only is there a big production capacity, 40% of the hydrogen consumption in Spain actually takes place in Andalusia, the neighbors to our energy parks and ourselves. So we can get going by supplying hydrogen near us and over time build a nationwide and over time a European hydrogen business. And the last point is important because we do believe that over time hydrogen imports from North Africa and Middle East, hydrogen exports to the north of Europe will come about. And what is the best connection point between North Africa, Middle East and Europe? It is again the locations where our energy parks are already. So we are very, very well placed, and therefore we set some really challenging targets for ourselves, which is to offer complete solutions to our customers, whether they are in industry, in road transport, or in the maritime sector, complete energy transition propositions based on hydrogen. And of course we will decarbonize our own hydrogen consumption. Before 2030, we will phase out grey hydrogen and simply only consume green hydrogen. In order to achieve those goals, we will create 2 gigawatts of green hydrogen production, predominantly in our energy parks, and start to become a key player in this import-export game that will develop throughout the decade and will become an important source of trading and optimization income for the company and for the country going forward. But some industries would rather have a fuel that is liquid at room temperature. Aviation is a great example. This is where biofuels come in. The great advantage of biofuels is that you don't have to change the engine, you don't have to change the infrastructure or the equipment. You can simply adopt it into your energy consumption. And therefore we believe that biofuels is an important part of the energy future and we are well placed to invest in it. Andalusia has an important ecosystem already of biofuel and biogas, and we will create a significant Spain and Europe and Portugal's biggest biofuel production node in Andalusia, aiming for 2.5 million tons of biofuels by the end of this decade, 0.8 million tons of which will be sustainable aviation fuel, aimed at a difficult to decarbonize aviation industry. And this will not just be a market-leading position in Spain and Portugal, this will be a European position, because it will be about 1/3 of the compliance volumes that are needed in Europe by 2030. In doing this, and in developing the hydrogen business, we benefit from almost 100 years of experience in handling, making, moving, and storing tricky molecules. And that expertise will be very, very valuable as we get into green fuels, as we get into green molecules. Now, where will we do that? At our energy parks. I've talked about how very well and strategically located they are. And as we move these parks, energy parks, into positive motion in the coming decade, they will become a cornerstone of the new economy in Spain and will make Cepsa a cornerstone of the new economy in Europe, producing increasing amounts of green molecules and green fuels alongside the traditional fuels as long as society still needs them, but also producing income for our business to fund the energy transition, to fund the important investments that we are going to make. Now, these energy parks go through their own optimization journey, not just to bring the carbon down by 55%, but also to become much more optimized, using the Internet of Things, using advanced analytics in order to optimize the production and the integrated production process that become ever more sophisticated and complicated as we add hydrogen and biofuels production facilities to these energy parks. These efficient assets in transformation will be absolutely key to the future of our company and to the future, indeed, of Spain. We will also produce renewable electricity because we need it. We will need up to 7 gigawatts of capacity just for our own needs. For the amount of green hydrogen that we're going to produce, the amount of electricity that we're going to sell to customer through our EV charging network, and for the amount of energy we consume ourselves, we need up to 7 gigawatts of green power capacity by the end of this decade. And this is mostly a self-consumption strategy. So this is aimed at covering our own needs, not necessarily becoming a large retailer of electricity, which is not the strategy. Of the 7, we have 1.5 ready to go with connections to the grid already established. Another 3, 4 in train, which we expect to be able to start putting online in the 23 to 26 period, and then we'll top it off in the rest of the decade to eventually, by the end of the decade, control about 15% of the total renewable electricity production in solar and wind production in Spain. So it is a relevant amount, but it's mostly for our own consumption. Now let me touch quickly on the 2 businesses where the strategy is not changing. But what is changing, and we've announced that before, is that we are making them more autonomous. Because these businesses have a different rhythm. They have different business models. They deliver to different customers. And they have basically different markets and limited operational synergies with the rest of Cepsa. So we believe by making them more autonomous, they will be able to, in a fit-for-purpose way, focus on their own business and do just what is needed to be competitive in the chemicals and E&P business, rather than suffer the potential cost of being part of a conglomerate. Of course, there will still be divisions of Cepsa, but they will have a lot more autonomy than they had before. And so they can focus on strategy execution and they can focus on maximizing value. In chemicals, we have very strong world-leading positions. We have in LAB, we are the #1 worldwide, which is a key ingredient for laundry surfactants. And in phenol, we are the #2 in the world, which is a building block for engineering plastics. In chemicals, we have a straightforward strategy. We want to go green, get fit, and grow. Going green means, for example, in LAB, using more and more renewable feedstock to produce lower carbon products and over time adopt circularity into our processes. We think that we can grow our LAB volumes by 30% by adopting this go green approach in the coming years, as we're already doing. We started our first green LAB in December last year. Getting fit means tripling the EBITDA from 2019 to 2026. And that's going well. We're already halfway, so only 1/3 to go. And continue to grow. If you're the leader and you want to stay the leader, you need to grow with the market or ahead of the market. We will invest and we will partner to continue to build this leadership position in the chemicals industry. In E&P, we have a global position that is very, very strong, and that we've been focused very much on getting the unit cost down in the last 2 years, in getting it to be more efficient. And we still have some way to go there. We believe we can bring our unit cost down by another 15% in between now and 2026, partly by reducing costs, partly by also increasing the volume. And we have some very exciting investment opportunities to do that within our existing assets in Abu Dhabi, in Algeria, in Latin America. And we also have one very exciting exploration prospect in Suriname that we're drilling this year. All in all, this business focuses on low cost, low carbon barrels and focuses on creating more free cash flow, doubling the free cash flow from EP by 2026 from where it is today, which will be a significant contribution to our financial framework. And that is exactly what Carmen will talk about.
Yeah, thanks, Martin. So Cepsa energy transition journey is really good news for all our stakeholders, including, of course, our shareholders, but also our financial debt providers. It is within our financial strategy that we will continue to be focused on value creation throughout the energy transition journey. This plan is expected to provide us with a solid cash flow generation, which continues to be a clear focus of our financial strategy, and with an ambition investment program that will be self-financed with a growing free cash flow profile over time. During the transformation, we expect to maintain a robust financial profile with a strong balance sheet, which should translate in an investment-grade profile. For the investments we undertake, we will apply a disciplined capital allocation strategy with a target of more than 15% IRR on average for new investment projects. And in order to accelerate this energy transition, we will be committing significant investment to the transformation of our company. We plan to invest between 7 to 8 billion euros throughout this decade. More than 60% of that will be dedicated to sustainable investments. And these are businesses which will be mainly driven in green hydrogen, biofuels, e-mobility, as you have mentioned, Martin, and renewable electricity, as well as decarbonization and energy efficiency programs for our assets. It is during these early years that even the majority of our investments will be also sustainable projects. And of course, this investment effort will translate into steadily increasing contribution of our sustainable energy to our EBITDA. So well before the end of this decade, we expect the majority of our EBITDA to be generated by sustainable energy businesses, which is a massive transition and transformation from where we are today at single-digit contribution, but where we are fully committed and we have the right team, resources, and shareholders to achieve our goal. And now, Martin, let me hand it over to you to walk us through the conclusions and remarks of our presentation.
Yeah, let me wrap this up and assure you that Cepsa is going to go beyond net zero to net positive, making a net positive contribution to anything we touch, whether it's the climate, whether it's the broader environment, whether it's questions around energy security, energy affordability, employment, equal opportunity, diversity, all societal elements. We will aim and we will have a net positive impact. We will make it easier for our customers and more affordable for our customers to go green through our sustainable energy and mobility solutions. We aim to be number one in Portugal and in Spain when it comes to fast charging, green hydrogen sales, biofuels, and sustainable aviation fuels. We make it simple for our customers to join us on that journey and create a brighter future for all of us. And yes, ladies and gentlemen, the time has come. The time has come to act now. Cepsa, almost 100 years ago, invested boldly in the previous energy transition from a zero starting point. Today, once again, we step up to even more boldly invest in the transition that's now ahead of us. To, from our starting point, become a net positive company. Restoring that positive experience that once was associated with mobility, with flying a plane, with driving a car. We have 10,000 motivated, competent and proud employees who can't wait to get going on this positive motion strategy. I'm very excited by what we can achieve together. And today we invite our customers, our suppliers, but also very much the financial community to join us on this journey. Together we can create a world in positive motion and a brighter future for all. Thank you very much, also on behalf of Carmen, and we look forward to getting your questions going forward.
Okay, thank you very much, Martin. And this finishes our presentation for today. We, of course, thank you all for participating, and we are open now the Q&A session. So any questions, please send them through the web system, and we will address those. Okay, so we have first question. We'll read it out loud for reference. You say that you're going to invest 7 to 8 billion in the next few years. How will this be distributed among the different businesses? And yes, indeed, as we have mentioned, we have an important investment effort that will accelerate our energy transition journey. And of course, for that, we will, and as we are currently, continue to invest in the business and the portfolio that we have. Very strong businesses across, obviously, all our activities, as Martin has mentioned. But as we look into the future, and as we look at the new Cepsa and beyond, we will be, of course, focusing on those areas for growth into the green economy. That is mainly e-mobility, biofuels, and of course hydrogen, amongst others, which will help us decarbonize, bring in solutions, whilst we also invest into energy efficiency across all our asset base. So I think it's really a shift and a trajectory that we will gradually, and you will see us, with a very important focus, as we will dedicate more than 60% of that investment program into sustainable projects.
Let me take the next one,
Yep.
Carmen. What is the impact of the Ukraine-Russia conflict on Cepsa? There's a short and a long-term impact that is probably worth mentioning. The short-term impact is that on the day that the conflict began, we stopped buying any products or crude from Russia. We were a very occasional buyer of Russian crude, but we regularly bought Russian vacuum gas oil. And on the day the conflict started, we stopped. And we see no reason to change that approach at the moment around us. Of course, the elevated energy prices have an impact on Cepsa. We are a large consumer of gas and electricity, and the price of those two have become a lot higher in the recent months. But of course, we're also a producer of oil, where the higher price actually helps our financials. So it's mixed. We have also stopped selling into Russia and Ukraine, but we were a very small seller of some lubricants and chemicals, so that's not material on the business. I think in the long range, what the conflict emphasizes and has brought to the fore is the need for Europe to think about its energy independence and its energy security, which I think will give an extra impulse in the whole European program and the whole Spanish program to shift to renewable, locally produced renewable solutions, such as the ones that we are promoting in the strategy of making biofuels and hydrogen in Spain for local consumers and for the rest of the EU. So my sense is, in the long term, this will accelerate our strategy. Of course, we hope the conflict ends as soon as possible.
Okay. So we have a next question around and I should take that. How do you plan to fund this large CapEx program, and how will you approach capital allocation? And yes, indeed, it's an important investment program that we have ahead of us. When we compare to the figures that we invested in 2021, we are close to doubling that figure on an annual basis. But we are going to be very conscious around how we invest this CapEx. Of course, and as we have presented, this investment program and this strategy actually is self-funded in the context of generating free cash flow from the activities that we currently have and as we bring forward new businesses online. So we expect, of course, to be devoting, of course, into the integrity of our assets and the health and safety of our employees, which is always a priority. And of course, honoring all our financial obligations across, but really investing into the future of what will Cepsa become in 2030. And that's, to enable us to progress on the strategy plan that we have presented to you today. Any excess cash to that, we will go to dividends to our shareholders. And of course, with the overall arching premise, as we have mentioned, that we want to maintain an investment grade profile throughout this period. Next question.
You want to take the IRR question as well?
Yeah. So the question is, what returns do you expect from these investments, and what is your target IRR contemplated in the plan? And I think, as mentioned, we need to have a very disciplined capital allocation strategy and, of course, criteria for investment. So we look to have basically projects that, on average, will give us above 15% IRR for these new projects that come effectively online. It's true that not all activities are the same. There is, of course, renewables where have lower returns, but as you know, those will be activities where we will focus for our own consumption. But yet, as we look at the different businesses, as we invest, and as we have, of course, model out this strategy for the next decade, we see that investments, as we move forward, will have, on average, that over 15% IRR target. And that's a disciplined CapEx within our financial strategy that we will follow.
I'll take the next one, which is, what partnerships have you made with your B2B customers to transition to a greener model? Have you made contracts to provide these greener molecules? I'd point to an example in aviation. As we said in the presentation, we aim to become a leader, not just in Iberia, but even in Europe, when it comes to the provision of sustainable aviation fuels. In the past 2 months, we have signed 4 agreements with important airlines, most of them based in and around Spain and servicing Spain, to deliver to them sustainable aviation fuel in the future. There's another pipeline of agreements with other airlines coming, and I think over the year you will see us sign more of these. But because that is typically a business where it's good to lock up the demand before you start making the large investments. The aviation industry is very motivated. The EU Fit for 55 framework gives them a clear framework to contract sustainable aviation fuel against. So it's a great example of where we are working together with customers to sign up demand before we make the investments. But there are others as well, and you will start to see them as the year rolls out. But we are in discussion with industrial partners on green hydrogen. We're also in discussion with road transport partners on adopting hydrogen into their fleets. So these B2B partnerships will be rolled out as they are ready to be rolled out, but you'll see frequent announcements from Cepsa as we create these intimate relationships with decarbonization with some of the biggest energy customers in Spain. Now then there's a question on, can the existing infrastructure at our refineries be used to make biofuels and green hydrogen? Or do you need to build new facilities? And the answer is a bit of a mix. We will absolutely need to build new facilities in order to reach the kind of quantities we're talking about now. There are certainly on the biofuel side still opportunities to improve and increase the co-processing that we do within the refinery, but to create pure HVO molecules, we call them the pure biofuels from waste to fuel molecules, we will need to build separate installations. But they will benefit tremendously from being in our energy parks, because there we have the utilities, we have the power, we have the steam, we will have the green hydrogen, we have the jetties that are needed to import the feedstocks or to potentially export the products. So being in our energy parks, even if these installations are new in their own right, will give rise to a lot of synergy that you wouldn't have if you didn't have the starting point that we have. And indeed, I will take one more question and then we're back to you.
That is mine.
In hydrogen projects, will Cepsa act as a producer, also as an off-taker for refining activities? And that is actually, that's a very insightful question, because at the moment it's not so easy to get enough green hydrogen demand together to be able to build a big plant. But we can be our own customers, because we ourselves are very big hydrogen consumers. So we can afford to build a big green hydrogen plant. And if the contracting of customers is going too slowly, then we'll simply put the green hydrogen into our own installations. If the contracting of new customers goes fast, which is of course the intent, then we'll build the next one. So being our own consumer actually enables us to be bold with green hydrogen in the early stages as the market matures, and then give our customers the confidence that the product will be there when they need it. So yes, we'll be a producer and a consumer of hydrogen.
Okay. And I'll take the next one, which is a good one, refers to whether this plan includes any M&A activity acquisitions. And indeed, the plan that we have provided to you today is fully organic. So the reality is that we have more opportunities that probably we can undertake. At the same time, obviously, we will be open and be opportunistic around M&A opportunities that may come up and that can complement overall portfolio and our strategy. So our program is fully organic driven, but we will be open and will be analyze opportunities as they come. If they're value creative, we will consider them and obviously discuss them at the board.
Do you want to take the next one as well?
And the next one around an update on our chemical process. As you know, unfortunately, we cannot comment on effectively market rumors and what it is around M&A activity that we may have, which is not necessarily closed. And of course, if, as you know, in October of last year, we announced the sort of more independent approach into our chemical business in order to get the best synergies and the best foot for the business. One of the leaders, as Martin has mentioned, and one of the key areas that can grow in the context of the future of its business. The reality is that we are evaluating a number of strategic alternatives, and when the right comes, we will provide you with an update on our chemical activity.
Let me take the next one. It says, could you please elaborate on your e-mobility and ultra-fast charging strategy? Very happy to. What I find fascinating is that every time we look at the e-mobility landscape in Spain and Portugal, we see the development being more rapid than we thought before. The estimates for 2030 EV car park in Spain go up every time I look at them. And I think this is a trend that is irreversible, and in some ways a trend that is exponential. So we do expect e-mobility to take off quickly, even if at the moment the situation is that we're behind Northwest Europe. I think we'll catch up over the decade, and e-mobility will become a very large business before the end of the decade. Our approach to this is first of all to make sure that we build out aggressively an ultra-fast charging network. What we find is that e-mobility customers are willing to pay a premium for a very fast charge. If you can get it to 15, 20 minutes rather than 30, 40 minutes, that pulls customers towards you, and it pulls customers who are willing to pay a premium. But secondly, customers quite like to be in an ecosystem where it is simple for them to consume, simple for them to pay, and where they know they get a price that is fair, but also a price that is predictable. And we are building exactly that kind of ecosystem together with Endesa, who of course bring with them their significant base of customers in the home. We bring our significant on-the-road network of 1,800 stations, and together we will also provide solutions that are called destination charging in supermarkets, in parking garages, etc. And by partnering in that way, we will provide a unique, all-encompassing e-mobility ecosystem for customers that they can't get with anyone else in Spain and Portugal. That is the approach. We're going to go relatively fast. I expect the business to go relatively fast. And in any case, I'd rather be too early than too late by bringing charging solutions to our customers that take away their fear of range, their range anxiety, and make them want to embrace this important decarbonization solution.
Okay, and the next question relates to effectively our EBITDA contribution in 2022. And yes, we have, of course, in the chart that you saw in the presentation, had reference to small single-digit contribution from green activities. And that's mainly because today, of course, we are already producing biofuels, and we have non-fuel retail as well that contributes, of course, to the green activity. We will have, the question also addresses whether fast charging stations, that's something that we will deploy, and that will be, of course, contributing towards the latter part of this year, but still in an very early stage. But you will see that driving and growing going forward. So the key change for us is moving from single-digit contribution where we stand today of sustainable EBITDA to more than 50% before we end up the decade. And that's a big transformation that we will undertake.
I believe, Carmen, that we have answered all the questions.
Yeah. Looks like it.
So
yeah.
giving a last opportunity, maybe?
Yeah.
I think we
are probably exhausted, everyone. So really, we hope that this presentation today and the questions that we have addressed are really the start of what we see the new Cepsa, and that you join us in this exciting journey with us. If there is any further questions that come your way, please feel free to contact our investor relations function and team that will be very glad to basically follow up. And thank you very much all for attending, for joining us today in this exciting journey with Martin and myself.
Thank you.
Thank you.